What's up, everyone? Welcome to the 1 minute strategy video. Sorry, let me move this one real quick. 1 minute strategy video, second part. So, in this second part, we will go a little bit more into depth about every single move of the 1 minute strategy. I call it 1 minute strategy, but it is actually a schematic known as Wyckoff schematic. Now, the only difference is that we don't care about every single move. We care about understanding basically where we want to enter and where the market is grabbing liquidity. Now in this video we'll go over how the schematic is formed, where we could enter the different type of entries that we could have, but please make sure that you are always following the trend, always trading in an area of supply or demand for your entry. And this is only used for confirmation, where you can have crazy stop loss sizes like 5 pips, 10 pips, or 15 pips. So you can get very accurate entries by using these type of entries in 1 minute. Keep in mind that the schematic, you can basically find it on every time frame, but we care about it only in 1 or 5 minutes to have the confirmation. On 1 minute you can see it more clearly, of course. This is why we're calling it the 1 minute strategy. It is for our entries, but of course it needs to start from the 4 hours. You need to find the direction of the market with the market structure, trend lines, and everything else. You need to find a good entry level with probably your supply and demand levels, which need to be fresh, Fibonacci levels, and so on. Now you come down to lower time frames and you want to look for confirmations at your area of interest. If there is no confirmation, there is no trade, right? So basically what happens usually is that we have, let me actually write it down, we have the selling climax, which is this one right here, and then we have the automatic rally, automatic reaction, whatever you want to call it, AR, right? Automatic rally or automatic reaction, right? Then we have the secondary test, ST, secondary test. And keep in mind that these 3 moves right here usually always happen. Now, I'm giving you how this schematic played off, but of course some concepts, some movements are different from schematic to schematic, because of course the market is not 100% of the times the same, all right? So in this case we have selling climax, automatic rally, secondary test right here, and then this move to the downside is the break of structure, because as you can see we were in an uptrend and here we start turning bearish. We have the break of structure, basically breakout of market structure, right? So boss break of structure, right, with this move to the downside, and we're turning bearish. Now we're not interested in entering yet. I mean, if you want to trade on 4 hours and 1 hour without looking at the 1 minute, you can do it. You just enter right away from here. You have a bigger stop loss and so on. I'm giving you these information so you can have like 5 pips stop loss and have a 1 to 10, 1 to 20 risk to reward ratio, which is crazy, but it is very helpful. Now, after the break of structure, right here, this move to the upside, right here is the spring, what we call the spring, right? Where we are grabbing liquidity. Why is this one the spring? Because it comes higher than the previous highs. So basically here a resistance was established with this double top, and therefore liquidity is above this double top. It is where most of the people have stop losses. Liquidity lies above this double top. Therefore, what the market wants to do is come back up, create the spring, grabbing liquidity, which is above this double top, and then start to push to the downside. Now, we're yet not interested in entering the market. I mean, I will give you more options, but the best option is waiting. And I will give you all the options later. Now you see we continue to the downside. We have the confirmation that this is the spring. We have another break of structure here. We were going to the upside again. Here we have a break of structure to the downside. And then in this case, which usually doesn't happen that often, but in this case we have another test of the spring, which is almost equal. Sometimes we do have a secondary spring that takes out the first spring, and then we have the push to the downside or to the upside if we are trying to buy. Now, keep in mind that the secondary spring is not really common. Usually the schematic plays off like this. We have selling climax, automatic rally, secondary test, breakout structure, which maybe doesn't happen right away. Sometimes we just have selling climax, automatic rally, secondary test, and then right away the spring and after the breakout structure, all right? So the breakout structure is sometimes we have it before, sometimes we have it later. In this case, we had it before, even better because we have a confirmation. We're waiting for the spring. Here we have the spring, another breakout structure, and we could be interested in entering some sales already. And then we have the push back to the upside, which sometimes could be even higher than the spring, and continuation to the upside, to the downside. And you can see that the moves are very, very big, and we're just pushing to the downside for quite some time, as you can see. Now, where do we want to enter? All right, first of all, we are not interested in entering right away, right here, okay? This is not where we're interested in entering. The first option is entering after the break of structure, which is the first sign of weakness that the market is aligning with our higher time frames. As I said already, keep in mind that we want the lower time frames to align with the higher time frames. Therefore, if in the 4 hours we're bearish, but in the 1 minute right here going to the upside we are bullish, the 1 minute we are bullish, we want to wait for that 1 minute to start aligning with the 4 hours. So once the 1 minute is aligning with the 4 hours, we can actually trade the market, trade and enter a sell. Now, for now, we're still bullish. Here we have the break of structure, and we might be interested in entering already. You might be interested in entering after some type of retracement. Maybe you can use fibs. You can enter just after some type of retracement. Keep in mind that this is the 1 minute time frame. It doesn't really matter if you enter right here or right here. It's like 2 pips, 3 pips of difference. So let's say that we enter right here at this retracement. Now, keep in mind that if you're not waiting for the spring, you will have a bigger stop loss, and you need to be aware of that because there might be a spring. If you already recognize the pattern and you know that there is going to be a spring, you either wait, or if you want to enter earlier, which I don't really recommend, but if you want to, you need to have a bigger stop loss. Just give the market space to move in case the spring happens, maybe even bigger in case we come to this level right here. And then of course a good risk to reward ratio going to the downside. So in this case the stop loss is like 40 pips, while GBP/AUD moves a lot, so maybe in other pairs it will be like 20-25 pips, just to give the market space. And then of course you need to find your target. This is the first option, of course not the best one. Second option is waiting for the spring. Here we do have the spring. After the spring, we are waiting for the breakout structure. So we have the spring, we're consolidating for a bit, after creating the spring, push to the downside, we are breaking the structure and also breaking the trend line. Perfect. What we do, we wait for a retracement. We can either use fibs on this retracement to the upside. Let me see, fibs right here. See this retracement, we enter at our fib levels. Short position, let's say we don't get the perfect entry from 0.79, let's say right here. Stop loss just above the spring right here, 10 pips stop loss. take profit. You can be happy with a 1 to 5, but let's say we actually want to find an area for take profit. Where is it? Oh, right here. Let's say we want to find an area for the take profit. Here we have a demand, and well, perfect. This could be take profit 1 to 5 risk reward ratio, right? Of course, we reached it. We actually went to the downside. If we just keep it, this is like 1 to 17, all right? But other than that, we are happy with a 1 to 5. We don't want to really wait forever for this trade to play out, and therefore 1 to 5, 1 to 7, 1 to 10 is good. In some cases, you're going to be able to catch some 1 to 20, of course, it's possible. Like in this case, if you just move stop loss to break even and just wait, then you will be fine. Now let's go back here, because of course we didn't cover the secondary spring that happened. I need to find where. All right. Now, as you can see, we are coming back for a secondary spring. As I said already, this is not that common. So what I recommend as the best entry in general is this one. Keep in mind that this was really perfect. We just stopped at the fib levels. Sometimes we come a little bit higher. So therefore, your stop loss needs to be above the spring. Make sure this is the spring. Make sure it is above it. So you're safe. At least the manipulation happened already. So it shouldn't happen again unless we have a secondary spring. But as I said already, it is not that common. Therefore, give the market the correct space just in case it wants to, create an equal high right here, but you should be fine because we grabbed liquidity already from this double top right here, which is selling time X automatic rally secondary test breakout structure. We are grabbing liquidity above it already. After grabbing the liquidity, we wait for the change of structure again, breakout of the trend line. This is the retracement. This is the test of the spring, retest or test of the spring, whatever, and then just move to the downside. Now, here we have the secondary spring, as you can see. This doesn't happen so often, so we're not really that interested in this one. In case it happens and you missed this trade already, you will need to do the same thing. Or let's say that you move stop loss at entry, and we come back, we hit the entry, you need to do the same thing. Since you're not sure if this will be just a continuation to the upside, because of course the market is uptrending right here and it might just continue, right? It might just be a breakout and a continuation to the upside. Since we don't know about that, we draw the trend line, we wait for the change of market structure. Well, right here we are breaking the trend line. Let me zoom in to show you. Right here we're breaking the trend line, but as you remember, we need to use it together with market structure, and market structure is broken here. After market structure is broken, we wait for some type of retracement. As you can see, little retracement, and then we just go straight to the downside. So this could have been another very good entry right here from this level. Stop loss, as always, above the spring. That's right here, 13 pips stop loss. And let's say even if you want to put your take profit to here, which is the main level, this is already 1 to 2. And of course, I recommend to use a little bit more. And if we use the same area right here, it is almost a 1 to 4. But as you can see, you can get a lot more using this type of entries and understanding where the manipulation is happening. Because after manipulation, we are taking the real direction of the market, and there will be some very big moves like this one. Now, let me show you another example on EuroCAD. EuroCAD, 1 second. Right. And this is funny because I'm showing this example, and it is a trade that actually hit my stop loss this week. I don't know when you will see this video, but this week I got a stop loss on EuroCAD. And the reason why, and I wanted to cover this in this video, it is really important, and it is a mistake that, as you see right now, I also make sometimes. Make sure to wait for the manipulation. I mean, you can enter before, as I showed you, but the best option is to wait for the manipulation, because in this case, which I will show you in a second, I thought that the manipulation happened already, but you need to be sure that it happened. I thought that the manipulation happened already. I thought that I was entering after the spring, but we really were not entering after the spring. It was just the spring didn't happen already. So as you can see, EuroCAD, I was bullish on higher time frames, so I will not cover for higher time frames analysis. We already did all the videos. So we were bullish on higher time frames. I was just waiting for the 5 and 1 minute to align to the direction of higher time frames in order to enter a buy. Went to the 1 minute. I found my, let me actually delete some boxes from here, some lines. All right. I was actually waiting for the market to align with my strategy, with the direction of higher time frames. So I saw, basically I saw the selling climax. Oh, sorry, in that case on GPAUD was the buying climax. Sorry for that. So in this case right here, it was it is the selling climax. Automatic rally to the upside, automatic reaction, secondary test, and this secondary test, I thought that it was already some type of manipulation which is taking out these previous lows. So I was not really sure. This is my mistake, of course. Right now I will show you the correct analysis. So right here we have secondary test. Right here, sorry, we have the automatic rally. And then here we have our nice break of structure, as you can see. All right, perfect. So selling climax, automatic rally, secondary test, break of structure. So right now we know that we're bullish, and we come back to our zone of interest. Of course, it was my mistake because I thought that this was the spring already, so I was entering on this retracement. I thought that this was the test of the spring, but if you see it, this is what happened after. There was this schematic right here, which is the selling climax, automatic rally, well, automatic rally in this case, secondary test, and then this move to the downside. This is the move that hit my stop loss. My stop loss was right here, hit by 1 or 2 pips, and then we just went straight to the upside. Now, this is, I will show you the correct way to trade it. So we have the selling climax, automatic rally, secondary test. And in this case, as you can see, differently from the GPAUD, we don't really have a break of structure. Well, yes, we do have one right here. So this is the automatic rally, which is also a break of structure, which is breaking above this previous high. But let's see about the trend line. Let's see. Let me actually check the trend line. I'll put it from here. Right, yeah, perfect. So this is the automatic rally to the upside, which is also a break of structure. It is breaking the structure and it is also breaking the trend line. So perfect. Here, all right, secondary test. After the secondary test, what do we have? We have the spring. Perfect, spring. This is the manipulation that we were looking for. Of course, when we get this move to the downside, we don't know if it is a spring. We cannot enter right here. Maybe it is a real breakout and we just keep going to the downside. So don't enter when you see this, okay? All right, it will be very, very harmful for your account because sometimes we just have a breakout and we continue going to the downside. We understand that it is a spring once we come back. Right here, this might just be a retest before continuation to the downside. It might just be a break and retest before continuation to the downside. So we still wait. Still wait. We wait for the retracement, come back up. Retracement, come back up. Right here, we are understanding that this is actually the spring. We just came back into this schematic we are back bullish again, creating higher highs and higher lows again. And right now, we're just waiting for the right time to click the button and enter the buy. So we have the spring, we have the schematic playing out, fib retracement right here. This is the test of the spring, retest or test of the spring, as I said already. Entry right here. And this is a trade that I didn't take because for my rules, I took already too many trades for that day, and therefore I was out for that day. But of course, I was watching the charts and I knew that this was the correct entry. But you need to stick to your trading plan, stick to your rules. So entry, stop loss below the spring. This is 7 pips stop loss. Let's see for possible take profit. Well, I had the take profit, I remember, at 48.40 right there, and this is a 1 to 4.3. All right, and as you can see right now, well, it actually went more to the upside, so we could have gotten more, but of course we're happy with a 1 to 4. Now it is your choice. If you want to actually wait for the 1 to 10, you can do that. Just keep in mind that you will have more break-evens if you try to catch bigger moves, because maybe we retrace to the downside. So if you have any question about this, make sure to contact me. I hope everything is clear. As you know, you don't really need to know every single name of the schematic. In this case, also, we don't have the secondary spring, as you can see, because it is not that common, as I said already. As I was saying, you don't really need to know all of the names of the schematic, but as long as you know that you're waiting for a break of structure and also break of the trend line, to understand that we are aligning with the direction of higher time frames. So in this case, break of structure and break of trend line, we need to use the two things together, as I mentioned in a lot of videos. After this, we are waiting for the manipulation, taking out the previous lows and grabbing liquidity for the big move to the upside. Manipulation happens, it is the spring, but we don't know if it is the spring already. It could be just a real breakout and a continuation to the downside. So we keep waiting. We come back into the schematic right here, creating also higher highs and higher lows. Maybe right here we were not sure already, but once we are here, there is enough confirmation that we came back into the schematic and that this was the spring. Wait for the retest, we enter, and as you can see, the market just takes off with really big moves to the upside.